good day to all. Sam here with you on a Tuesday, June 26th here. And today, as we rotate around now, as I've mentioned in prior videos, we used to have two separate channels, crypto on one and traditional assets on the other. We've decided to combine them for a number of reasons here. One thing to kind of reemphasize is that I like to tell you is that it's the same analysis regardless of what the underlying asset is. Exactly the same, which is kind of the whole point that I have been stressing recently. It's the discipline to approach the market the same way every time. Now, I've been doing this for a long time, so I have a large degree of confidence in this methodology. Now, that doesn't mean that we're not stopped out. Often we're stopped out. I'm just say specifically, I am stopped out way more than I'm not. Way more. That's the reality of trading. If you have a problem with that, this may not be the right. This may not be the right vehicle for you if you're looking to make money here. You have to understand that regardless of the methodology, you're going to get stopped out more than not. Right, particularly if you're disciplined with your money management. It's just the nature of trading it. But that doesn't mean you can't be very, very the most profitable traders in the world. I guarantee you they make the majority of their money off of probably 20% of their trades. So getting stopped out, it can't be something that just blows your world up. It's just the reality of trading. It happens all the time. So what is the criterion for success here? So it's got to be tied to the money management. Certainly, if you got to understand that if you're going to be wrong more than you're right, when you're right, you got to make a lot more than you lose when you're wrong. That's just the basic math of it, right? So I don't need to explain that to many, I'd like to think. Now, the last time we were looking at the euro here, which was the members' preference. So we, as I've mentioned, we poll the members and let them pick what we're going to get analysis here. For traditionals, but a lot of people wanted to see the euro, and that was our clear standout. So as I look at it here on this 4-hour chart, one thing I want to point out here is that we had a massive failure here. So the last time we looked at this, we had a target up here. We thought we had this. We had a target like this. So we had this beautiful, you can see how from the low here, from the 2017 low, just this beautiful 5-wave structure. It couldn't have been a prettier impulsive structure. Yet in the fifth, we get a failure. Now, a failure in that we don't go to target. We end up with this triple top up here. So we do get, just barely, we get a higher high here. But that's, if you think about potential targets, so if I just common wave relationship, so if I take the length of the 1 and project from the 4, well, common targets are the 6, 1, 8, and the 100. So even just to get symmetry here, length of the 1 to length of the 5, we fail that here. So we had projected, and we were using this as well. So from the from the 2 low to my 3 high, you can see here. So we had a perfect 4, all set up to go up and get that target. And I think last time we looked at this, we had this as a triangle. So as I recall, we had it this way. So we had that up, and then we got this, just a massive failure here. So here was the triangle that would, as I recall, if you go back and check that video. But here's what we were looking for. All right, so we had this all teed up. I mean, it was, I think when we last analyzed, we were right here, and we were just teed up for that. And it just fails, right? So just because you have a target here doesn't mean it's inevitable. It must be realized. So it goes unfulfilled. So we get a failure here. Now, again, so if you were, I think the last time we looked at it here, we were buyers here looking for that. So the fact that we don't get through the trend line here, listen, so first question, is that an intelligent trade? Was that a good trade? Well, a good trade does not necessarily always mean that it's a profitable trade. That was an intelligent, technically valid trade. I mean, with the entry here was at 22.46, and we got up to 24.02. So, not a bad profit actually in that, depending on your size, right? What you traded there, you only get almost 2 points, not quite. So I'd like to think that anyone who bought there may be considered a partial profit as we ran into that resistance on that trend line, and then moving the stop to break even would be a reasonable thing to do. So the fact that even if you just were a couple of ticks under that low, the fact that we break the trend line here that was, well, fairly well established here off of this low as we came into this triangle. This break here was substantial, so the loser here should have been modest. And I'd like to think your stop was at break even. All right, so if you just common sense, if you're 2.5 points, 2 points up, maybe grab a partial on that, move the stop to break even. So you should have made a little money on that, but we don't get target. That's right. So that's the point I'm trying to make, is a failure of an Elliott wave count happens every day. You just that doesn't invalidate the methodology. It's just the reality of trading. There is no perfect analysis methodology. Elliott wave gives us a way to structure and categorize and quantify and create probability zones. That's all we're doing, is trying to organize the chaos in a methodology that allows us to be consistent time after time. Right? I can keep harping on that. It's the same approach every time. So we get a failure here. We get a failure to get a clear target on a 5. Well, does that invalidate the count? Well, no. So we have a 5th wave. So here's our 5th. All right, we had some reasonable targets here. So if we just, on the larger degree here, pulling for the length of the 3, this is, so here we're between the 23 and the 38. We get this nice little ABC. Well, here's the larger algo target. We got that. But we didn't get the subdivision that we were after here, trying to get up to 27. Like failure, down we go. All right, so let's pick it apart and let's focus on the hard right edge, because that's what we're interested in here. So all of this done. So this is in. This 5 is complete. So what do we have? We have a 5-wave sequence, an impulsive structure here that has completed given the depth of this retracement. No other way to count it. So what are we looking for? Well, we're looking for the wave 2. So from that to the pivot high, right there we go. So here we go. So we've come now a little shy of the 50. Now, is that a front run? I think not. I think there's a little bit more of a push down here. So I would be holding for this little confluence zone that we have down here, which I'm going to show you. We've got a little confluence zone higher. Now also over here, let me take some of this off here so you can see it. We'll recreate this. Yeah, I want that. I want this off. Do you see here where we get this low volume node here right in front of the 50? Now that could be the result of this. And we get this, what appears to be kind of a support zone here that we're dealing with. So if I include all of that in here, and now look over here how we've got this low volume area here. So one of two things happen, right? When you get a low volume mode, it means either the market doesn't accept it, so we're going to move through it quickly, heading towards more market acceptance, or we're going to rally back towards, well, here's our point of control. Right, so potentially a pivot sets up there. So often you'll see the market, so what we'd be looking for is one more push down and then the move off of it. So let's see if that's realistic. So let me get rid of that. Now we got to go down we're going from the 4 hour. Let's go to the 1 hour, see if we can get a count here that works. Well, with the break of this triangle and the failure here, we have to relabel here. So this is our 5. So we get an A, 1, 2, 3 into a B, and it would appear that I've got a 1, 2, big 3 down, and then I've done my 4. So from here, from my 2 to my 3 low, well, we're to the 38, damn near to the tick. That may be to the tick. So does it look done? Well, it's a tricky count. I had to go down to a 5 minute to get a 2 in there. You really got to dig that 1, 2 out. So we have the problem with that is the length of this 5th. Now so here was the problem we had at the top, right? So this could be just duplicating. So take note of this here. All right, see if I can, I guess I have to go to a 2 hour to show it to you. All right, so we had this. So we get, come here. So we get this failure up here where we get this, essentially we get a triple top up here, even though technically we get a new high. Well, we're getting similar action down here. So it could be here, do we even get a new, let's see here, do we get a new low? Yeah, well, I just barely do we get one. See if you can see this here. So from this, here's my low. So we break it by, boy, 4 ticks. So technically I could have it here. So I could have, because I get that new low, I could have this completing here, but I'm inclined to think there's one more drive down. I'd be looking for this push to come down here. So you look at the gap here, even on the 2 hour, this low to the 50, yeah, it's possible, but I'm inclined to think that there's likely that we've just put in So if we call this complete, there's a real, oh, that actually from swing, this looks like that's golden zone here. So just looking at it. So this, I'm inclined to be looking for better pricing down here. If I'm looking for a long, I will hold for the 50 simply because that's higher probability. So let me pull some of this off. So we have a contender here. Well, this would have to go over here. So we have a possible. Let's think about it. All right, so this looks completed 5. So we have a potential 1, 2 going in. We'd be looking for 3, 4, and 5 to be much lower. So this whole thing would, oh, let's see. So this would be, we'd have it this way here. Bear with me while I organize this. Okay, so that would be potentially here. So this has to go up a degree. So let's go from micro. Let's go to minuet. Okay, so we could have 1, 2. All right, let's check that 2. So from, looks like golden zone here. So from that to this, yeah, right. When you know, I've been doing this a long time. So right to the 618. So 2. So potentially now we've got this push down here for either this algo target here, or we're going deeper and we're going to get a real 3. So we'd be looking for something down here. You know, here would be the, so this, if we're going to go deep, if we're going to get the 1618, we'd be looking for a 3, 4, and a 5, you know, could break the 65, and then the whole thing has to be reconsidered. But, well, let's think about that. So if it's a 2, we know a 2 can go as deep as the 786. I've got my negative 1618 here. So putting this back into context here, we could, if the trend's going to continue, let's move this up. So this could be 1, 2. This would all have to move over. We move this looking for a 3rd to come down to this target. So here, you know, that's going to be, I don't even think we get 100%. So if I take the length of this 1 projected from this very technical pivot here at the 618, well, here's 100%. So we'd have to break the 50, break that algo target, whoops, to get to 100%. So this would qualify as a 3. So, you know, you can have that. Right, and that would put you down here. So the C's coming in between the 50 here in red and the 618. That's possible. But if we're going to get a good drive down, you'd be looking for it closer down here. So is that a reasonable short? Yeah, that is a reasonable short right there. And if you're not in it, I wouldn't chase it here because the trade was to be there right at the 618. 1, 2. Right, perfect 2. So do we finish it this way? Well, this would all kind of set us up to be heading down to this kind of level. So there's a potential roadmap. Looks like we're off to a decent start here. So we'd be looking for 3, A, B, C into the 4, and then down for the 5. We finish that. I got to click that a few times. So we'd be looking something like that. So do we get clean? Can we come down here in 5? Right? Do we come down something like that to give us an impulse that we would need for that 3rd, and then up retracing for the 4, and then down for the 5? That could put us right here in the golden zone here. So that's the roadmap of what we're looking for. 1, 2, 3 into a 4, down for a 5. Just respecting the trend, right? Nothing, again, not rocket science here. Just clearly an impulsive move here. I mean, this is the very small. That's a little bit of a tricky count right there to get 5 out of that, because this is just straight rip down. That's the first decent retracement we get. So we can't have 1, 2, 3. Well, I guess we could if we've double bottomed down here. We actually could, because then remember, 3rd doesn't have to be the longest, just can't be the shortest. But if that's our pivot here and we're not coming down again, but I wouldn't trade off of that. I wouldn't trade off of the assumption that I'm going to get a double bottom here on the 5th and try and front run to the long side. So I would not be doing this. So I would not be looking to catch this on the retrace on the assumption that I've got my low is in. I'd be taking the 50 to the 618 here, looking for that to go this way. I would not take that trade. That's not what I think is happening here. And again, just playing off of probabilities and market structure and the pattern here. 1, 2, 3, 4. That, while it's possible, because we saw it up at the prior high, the probabilities would suggest that we've just done 1, 2, and we've still got more to go. So I like it on the short side. All right, and I'm definitely going to like it on the long side when we get down here. Right? That's where the next buy is, in my view. Right? That's how I would be approaching it. I'm not in the euro at the moment, but that's how I would be looking at it. And again, while this is possible, I think less likely. So why put money on the line here if it's less likely? Could you be right? And yeah, of course. Of course, that's a contender. That could come down here, put in the 2, and then up we go for the 3. We get a 4 and a 5, and then we end up with this double bottom down here for this 5. But it's less likely. So why would you trade that if it's less likely? Only you can answer that. I've been so all I can tell you is that that's not how I would approach it. I just respect what I see here right now. The current trend, well, certainly it's down. This confirms it as we go right to the 618. We don't break it. That would have been a contender now if we had broken the 65 here on this move up to suggest that maybe the trend was reversing, as we'd now be more likely to have algos as buyers here on this next 50. Right now, algos are sold here, and they're looking for this off of that sell. Here's the next one, and then we've got the bigger ones down here. So the only other thing that I thought was worth pointing out to you guys, so let me bring this back here. I guess I have to go to the 4 hour, is that in foreign exchange, median lines should be essential. It still amazes me. It is probably one of the most common tools in any technical package. I don't care what you're using. Yet it is one of the most least used technical tools in the market, which just blows my mind. I'll just show you a couple of examples here. It's very well respected in Forex trading. Okay, so we get 1 and a 2. Am I right on it? So we get just shy here. So this failure here to get there implies weakness. So the fact that we don't get there, but we did get, so look here. So if I go from here to here, look how far we've gone here. We've gone through the 2618. So you'd be looking up at 3618, trying to get something here to suggest that, given how far that went. Now let me go dig in here, make sure I've got these spot on. Actually, no, I think that's the lower. Nope, that looks like that is the low. So I got to get this right on it. I thought we were a little tighter on this. They get right on it when you change the time frames. Okay, pulling back out. All right, so there, I thought it was better. Okay, so here we've hit it. So from dialing that, so all that happens here, when you change from a 1 hour to a 4 hour, your pivots will move slightly. So you got to tighten them up here. So it's always good to just zoom in on that, get them right on those pivots. So here's where we realize the 3. So within that 3, it would appear that we had 1, 2, this could have been 3, 4, 5 of the 3. We end up with a 4, 5, gives us another kick. So here's the golden zone right here. So here's your corner pocket, because I think that went deeper. Let's check it. I think that went deeper than the 7/8 or than the 6/5, if I recall. Just barely breaks it. That's by a couple of ticks. So from that, so look here. So here's the first algo target. It comes just shy of making the median line, retraces, comes back to the 50. Now we go all the way to tap it right here. So that's from 105 when we actually finally hit it is at 118. That make your whole year right there. That's. And it finally tap, and then we get a little failure, and then that's the retrace. Well, let's look again here. So from that, so if I'm looking here, now I'm going to draw it again. So from this low to my 1 high, to my 2 low. Look what we tap right here. Take that off so you see that. So we had another corner pocket. That may be golden. I can't remember. I got to check it. From this low, golden corner pocket to the tick. So look what happens here. I got to open this up so you can see it. All right, so here is the best. I would tell you it is the single best trade. So if you did nothing else, no other trade, no other setup, nothing else you did other than take golden corner pockets, you'd be I think you'll find your trading will improve. So looking here, so from this here, so I'm sitting in the golden zone right here, and I've had this perfect 3, 4, 1, 2. That is a trade you got to take. So here's the first tap here. So we get the algo target here as we get to the median line. It pulls back to the lower parallel. Vegas wave catches it. Now we go to the upper parallel, back down lower parallel, and we actually pivot on the median line. Median line trading principle number 2. Right, here's trading principle number 1. If those pivots hold, 80% probability of making the median line. Trading principle number 2 is that very often the pivot will be made at or very near the median line. This one we get it to the tick, and then that's the sell-off. Right, so I encourage you to be drawing your pitchforks, particularly when you get a 1-2 that's at the golden zone. That very high probability here. So from a money management perspective, as we were talking about over here, so here's a partial profit. Here's a retrace, potential load. So you'd have 1-2, 1-2, potential load for a potential reload. So if you took it here and you took partial here, I'd like to think your stop is sitting at break even. So now we get a 1-2. That looks like that's about a 50. So yeah, I know this is going to be hard to see, but if I, yeah, right, just a couple of ticks shy of the 50, then up we go for the 3. So let me pull that off. I know this is getting crowded in here, hard to see it. So let's pull that off. So come here. So 1, 2, then we go up 3, ABC down for the 4. Here's the failure swing, but another tell was that median line tap. Right? That's a tell. Well, I'm not right on it. That's a tell right there. So 1, 2, 3, 4, 5. That's a tell. Now, of course, we're here in hindsight. You'd have been anticipating the push higher. Right? Would I have shorted that? No, but that's certainly a place to consider, again, just as it was here, a partial profit. Remember, we had this from the 2 to the 3. All right, here was the 4, tap the median line. You know, we were looking for, right, as I recall it, we were looking for the pullback here and then one more kick up to get it, but we just didn't happen, right? And here's where we fail. Now, coming back down, I don't have a lot there to work with in terms of applying any median lines, but I could start with something. So let's clean this all up here and get this cleared up so we can see it. So I don't have much to work with here, but I would start looking. I'm just, right, you know, initially it's kind of, can I find anything? Well, is this the failure swing here? Look where we sit down here. So the market seems to be respecting it. Here's the 50%. We've gone upper parallel. So let's see if I can make it this way. So from here to here. So we know a B very often will go 786. It's a push to get to new highs that fails. So here's the corner pocket, 80% probability. So from here, if that pivot holds, 80% probability of making the median line. Right, so here we go, down, 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 down. You could call that's awfully close. Yeah, I would consider that a tap. Retrace, then back. Now we break it back to the outside edge. Are we going back down to tap it again? Well, you know, that would be kind of interesting. And then I've got this down here. So here's my 1, 6, 1, 8. So if we're going to go, if this is going to go 1, 2, 3, I'm going to watch those median lines. I'm going to watch for any reaction there. Do we get, now if we start to trend away from it, well, then you rethink it. But right now you can just see how beautifully these contain the market and how the market respects them. So I would encourage you to never trade without one applied so you're not missing or wondering, why did we pivot here? That's the question. Why? Why does it pivot there? Median line tap. And then we start down. So it's just something to keep in mind. We could tap it again here. There's all sorts of different scenarios, but right now the trend is down. We are correcting that 5-wave structure. We've got the 50, which is our minimum target for the 2 lower. So I'd be looking only for sells. Only for sales. So any sort of a retracement here, potentially now just a 1-2 going in. Opportunity to ride this down. So we're sitting here at 1650 and the 50 is at 1303. So you got 3 points of juice there. Yeah, that's tradable. Absolutely, something to definitely have on your radar for. So now if we go back down, take it to a 60-minute, which is what I would encourage you to use for trading FX. If we get a little 1-2, so if we get this move and we get this little push down from that 618, that 618 is our last tell. That's the last algo play. Do we get a 1-2 going for the 3? So there would be the next trade. Look for a little retrace. It sets it up, right? If we're looking to be selling, we want to sell it when it's moving up higher, but we're not trying to pick the pivot. So here I can be very definitive about where I'm out. So if I'm a seller here, and again, I'm hypothetical here. I don't know that we get this. But if we were to come down here, and if I went down to a 15-minute and dug out that 5 just as we did over here, if I can get 5 down and 3 up, yeah, that's one I would take. Looking to sell it, looking for that move down to the 3, and then knowing that this median line will be a magnet, so that market will want to come back to get to it. All right, that's what I see here. So I wouldn't chase it here short. I would let it come down, wait for the first retracement, pull the trigger. Stops on the other side of the 65. Same thing every time. All right, guys, just a reminder, give us a follow on Twitter. The handle is Trade Devils, as you might expect. We do a lot of things there, and we give you access to our public Discord where you can kind of sample what we offer to the members within the private Discord. You can learn more about everything we're doing here. You can visit us online at tradedevils.com. And if you're interested in just taking a peek into the Discord, that's a good way to do it. And then we're doing a lot of promotion and letting you pick the charts that get analyzed here amongst our Twitter followers. So we do a lot there. I would like to think we can offer you some help, or at least some things to think about. So give us a follow on Twitter, and that'll do it for today. All right, guys.